在投资领域中，我们通常会把投资的资产分为两类，一类是传统的资产，包括股票、债券以及现金，那么通常用英语叫做 traditional assets。另外一类叫做另类资产。这个另类资产它包括的门类就很多，所以说我们叫它叫 alternative assets。那哪些是另类资产呢？比如说私募股权、私募债权，包括地产类的投资，包括对冲基金、商品类、艺术收藏品类，以及最近比较火的数字货币类的资产。今天我们邀请到的嘉宾就是 Jason Jogia， 他是来自加拿大最大的私募地产信托基金之一的 Avenue Living， 他是 Avenue Living 资产管理团队的 CIO， 也就是 Chief Investment Officer， 是这个团队的首席投资总监。那今天我们就要跟他做一个专访。根据网站上的信息，这个团队管理的资产已经超过了85亿加币，其中最著名的基金是叫做 Core Trust， 或者叫做核心信托基金。目前这一支基金的规模已经超过了60亿加币。由于 Avenue Living 的总部设在卡尔加里，那我们今天就通过视频采访的方式来采访他，让他从业内人士的角度来谈一谈这支基金的管理情况，作为知识分享。由于视频的内容会比较长，所以我们分2期放送给大家。Tell us about your responsibility and roles in Avenue Living Asset Management.
Sure. Thank you, Frank. Thank you for having me. So I'm Jason Jogia. I'm the Chief Investment Officer and co-founder of Avenue Living Group of Companies. I've been with the firm for just around 10 years. And I am responsible for everything related to the capital activities within the business. So whether that be the equity side of the business, the debt side of the business, the investment side of the business, myself, along with our co-founder, Anthony Giuffre, handle everything on that front, as well as the day-to-day operations of the businesses.
Thank you for the introduction. I read a lot about you. I heard you're a lecturer at the University of Calgary, and you have a business degree from different universities, and also you are pursuing a doctorate degree in business as well, and you're still pursuing more academically while you're working with the industry for many years. So with that experience, how would you say the academic pursuit would help you in managing the assets and the capital allocation in terms of Avenue Living assets?
Yeah, I think it's just the continuous improvement pursuit, understanding, what we do as a firm, but being objective to be able to understand what other firms have gone through. Typically in academia and literature, you find case studies of kind of lots and lots of history and archives of business. I mean, there's tens, if not hundreds of thousands of different articles out there that can be there to create solutions to challenges that you face. And, when we think about our businesses, we focus on the customer, and the customer turns into revenue and opportunity, and then that turns into returns for our stakeholders. But to get from the customer to the stakeholder, there's a lot of processes in between that. So we build businesses and systems and processes to be able to be efficient, to be able to do it competitive with a competitive advantage. And academia allows me to understand great exemplars of industry and how that could apply to our industry. And then selfishly, by teaching the younger generation, I can recruit and I can hire people. And I've hired numerous graduates from the University of Calgary over the years.
Thank you very much for that. So in terms of Avenue Living, I saw there were 3 different funds that we have. The first one is called Core Trust. The second is called Farmland. The third is Minimal Storage. And being the focus for today is actually the Core Trust Fund because it's one of the biggest and it started earliest in a product line. So that being said, can you tell me a little bit more about the core positioning and the differentiating strategy about this core fund? How is actually positioned? And I read through the public information and I saw you're focusing on workforce housing opportunities overlooked by others. Can you interpret this concept and how does strategy play a role in making the right decisions for the acquisitions and also for the investors?
Sure. So workforce housing as a subsection of the rental housing spectrum is really the residents who make between $15 Canadian and $50 an hour or US. And this is really that kind of renter by necessity. They're not affordable housing, but they're also not the shiny, bright and new housing. And so we built a business around catering to a socioeconomic profile, which is about 40% of renters in the country. They fall within this bandwidth. And so when we choose an asset, we're choosing an asset that fits this profile. And typically that asset would be larger suite sizes. The average suite at Avenue is over 800 square feet. It would be assets that are not brand new. They're not new developments. They tend to be a little bit older, what we call legacy assets, where the average age might be 10, 20, 30 years old. But by buying that, we can get it below replacement cost at a discount, so the rents don't have to be so high. And then we really focus on geographies that have good yields, good cap rates, because we're not looking for the market to create growth. We're looking for our operations to create growth. And how we create that is by taking one of these assets that I mentioned and improving upon it. Not so much so that we displace the customer, but enough so that they can see cleanliness, safety, brand recognition, service standard, and then they're comfortable paying us as the landlord a continuing reoccurring revenue stream. And so by doing that, we're now in over 22 different markets across Canada, the US. 25% of our assets are in the US, 75% in Canada. Most of our assets are in non-rent controlled environments. So what that means is that we can raise the rents as we see fit based on market conditions. We're not governed by any kind of legislation, aside from the fact that we have to only do it once a year or twice a year within some reasonableness. And we also have our own governance around what we can do. But this allows us to keep up with what's happening in the market in real time. And so the business has grown, as you said, Frank, it's been almost 2 decades now that we've been at this. And it's now just under 22,000 units in those markets. And we operate it ourselves. In Canada, we've got our proprietary property management and asset management. In the US, we've got a hybrid strategy. So we decided to focus on a certain socioeconomic profile first, the building second, and the market third, to then create this differentiation within our platform. So that if I buy a new asset, it's the exact same playbook. And I kind of akin it to, the McDonald's Big Mac. It has to feel the same and taste the same everywhere you get it, but you should be able to get that at any Avenue Living building. And that's the concept that we have.
Great. So as I understand, there are a couple of things. First of all, is investing in everyday workforce as you determine where the social profile is at. And the second thing is vertical integration. That means you manage the buildings yourself, acquisition. Can you elaborate on vertical integration?
So in our early existence, we realized that by having a third-party manager from the customer to the stakeholder, you lose a lot of value and you lose a lot of control. It was really important for us to go and do it ourselves. And in order to do it yourself in property management, you need scale. So this business has all been about growing the scale, the depth of the platform to be able to have the various human capital and technological capital elements to service the customer best. And so when we take a platform like Avenue and what we've accomplished, whether that be the interaction in our call center, whether that be the 72-hour work order turnaround commitment we give our customers, whether that be our pest control mandates that we have, whether that be the capital expenditure we put in the building or various initiatives in the value add that we do to the buildings, it is all done for the most part in-house. And that allows us to control costs, output, speed, and it makes it so that the margin is preserved within the business. And we learned that very early in our existence, that it was really important to have as much control as you possibly can, because then you can really know your customer very well. I will put an asterisk and say in the US, because the market is 10 times larger and property management is much more commoditized, we created a hybrid strategy. So our on-the-ground facilities and sales managers are hired by a third party. We hire a third party to do it at a very low cost. And then we manage them with both asset and property management functionality to augment their base services. But we still try to exude the same amount of control in the US as well.
Okay, great. So in terms of scale and diversification, can you add a little bit more why we see the profile is actually adding more into the US markets? Because at the very beginning, it's about 10% of the units in the US, and now it's over 24%, so almost one-fourth of the market is in US. And how does that play into the role and by generating return and mitigate risks such as immigration slowdown in Canada?
Yeah. So, as we grew this business, we were a story of Alberta and Saskatchewan and very little in Manitoba. As we grew up here, we were very, very successful in consolidating assets, and we still see a horizon to consolidate assets. But we had stakeholders, both bankers and equity investors, who always asked, are you going to come to Ontario? Are you going to come to Vancouver? Do you want to buy in other provinces? And we always looked at those provinces to say, we don't have a lot in common with them. The way we operate in the prairies is different than how you would operate in Ontario, in British Columbia. And so we started to look a little bit further afield to say, well, what markets could make sense? We looked at the Maritimes, but that's like another country in terms of distance, a 6-hour, 7-hour flights, 5-hour, 6-hour flights. We looked at the states, and we very quickly realized that a city like Kansas City, 2 million people in their MSA, have more in common with Calgary than the GTA does. And so as much as they're the same country, Canada, Calgary, and Toronto, it's actually more synergistic for us to operate in Kansas than it is for us to operate there. And so that was our expansion about 5-6 years ago into the US, where we started to buy assets in certain markets that had very similar characteristics of the everyday workforce, as well as of the regulations around how you operate rental there. And so we in the US can buy assets with real yields, great caps. We can operate them with a very similar playbook, and we can find very comparable customer profiles to what we're already used to. So we don't have to pivot the business model. We just look at this as geographic diversification. And why this was important to us in the growth and the diversification is that regional economies tend to have swings. Right? We used to know that in Alberta, it was all about oil up, oil down, oil up, oil down. It had nothing to do with our business. Renters were renters. They always needed a house. But banks, equity investors, when oil started to correct, would get nervous. Oh, we're risk off. We don't want to do loans there. We don't want to do things there. And I mean, I came from a banking background. I knew exactly what the risk on, risk off profiles were. So it was really important for us as we rolled this thing forward to basically say, okay, how can we make sure that if the going gets tough in one city, one province, it doesn't have an impact on Avenue as a whole. And that's why we made a very concerted effort to diversify our base into the US. And that's now why we're almost 25%, as you say, in the US, with aspirations to continue to grow there, but we're also not done growing in Canada.
Okay, great. That gives some clarity to our investors as well. The next question is something about the liquidity and the redemption risk, because this we may have heard many private REITs run into trouble with liquidity and issues with have to hold the funds until further liquidity comes in, distribute the units to the clients and investors. So in Avenue Living, how actually you manage the liquidity?
Yeah, look, I think what we recognize in our business being a private capital market product, alternative investment, as some would call it, treasury is a very, very important function, and understanding what can put pressure on treasury levels. So coming into cycles with lots of cash, with low leverage, really helps, because if the going does get tough and investors decide that it's time to go, we would want to be in a position to service that. We set a policy many years ago, post the pandemic, to target having redeemable capital of at least 10% of redeemable NAV in capital, in cash or cash equivalent, or undrawn line availability. And so we've been operating under that for years now. And what we've always noticed is that a lot of our peers, when they run into issues, it typically happens when they get to 4, 5, 6% redemption limits or redemptions of their capital stack, and then they hit the gates. So we always thought if we keep a threshold well above that, then at least we could differentiate ourselves when the going gets tough to be in a better position. Gates are there for these types of products because they have to be, but we also choose to be in the private capital markets because it is a very rewarding method of raising capital in a disciplined way to be able to grow a firm, typically in a better way from our vantage point than being public or being in some of the other capital structures that are out there. But it does come with the risk of redemption. And so a good, sound balance sheet with really good treasury management enables us to navigate that to the best of our ability.
Great. Liquidity is one of the issues that we can see on the macro environment or micro environment in this market today. And can you tell me a little bit more about how your funds is being held by institutional or retail investors? Because sometimes retail investors and the institutional investor can behave very differently, and how you manage the risk of liquidity.
Yeah, I would say to you that we have a very, very wide disbursement of advisors that allocate to us. There's over 800 advisors that have allocations on behalf of tens of thousands of individual investors, whether that be a corporation, an institution, or a person. We don't necessarily go beyond that advisor level understanding. Within those advisement houses, we've got everything from sophisticated exempt market dealers that are doing a lot of due diligence and they have money that's more high net worth accredited, stickier money, to maybe something that's going to be a little bit more retail, a little bit more of an eligible investor. But the diversification of the investor it's what's important, and having multiple sources of capital is important. So I would say that we manage that risk by not having one investor that rules them all or one piece. And then I would also say that communication and transparency are super important to us. So when goings happen, things get different, things have questions, our team is out there talking to the advisors, making sure they understand our business model, our philosophy, our differentiators, and then ensuring that there is no contagion effects to the best of our ability when those things happen.
Thank you very much. 好了，那上半部分的内容就先分享到这里。那不知道大家是不是对这一种信托基金有了更深入的了解？那么也谢谢 Mr. Jogia 来参加我们今天的访谈。那下期节目会更加的精彩，因为我会问 Mr. Jogia 一些更有挑战性的问题，请大家继续关注下期内容。我是小明，您身边的资产配置顾问，关注小明财商，理财路上不慌。我们下期见。